Hello, my name is Steve McCrindle. I've got over 40 years experience in VAT. I've worked for HM Revenue and Customs, big four firms, mid-tier firms. I've been a partner for over 20 years. This is the first in a series of podcasts that are related to trade. Today's subject will be the import of goods, principally into the UK, but with implications for other jurisdictions such as the European Union. And with me today is a colleague of mine, Victoria Nest-Sareva.
Hi, my name is Victoria. I'm an international trade and customs consultant. I've been working with international trade and customs for about 10 years. And today we will be exploring the topic related to import VAT. Okay, Steve, if you could maybe explain what import VAT is and how it is charged on import, what businesses need to be concerned with.
That's fine. In the UK, there is a two-tier system for declaring imports. One is a default system, and it is a system that has operated in the UK since the 1st of July 1984. But on Brexit, a new system was introduced called Postponed VAT Accounting, or PVA for short. I'll explain how these work in a minute, but it's important to note that in the UK, it is only the owner of the goods that can recover import VAT. And an owner is deemed by HM Revenue and Customs to be either a person that has title to the goods or a person that has the right to sell the goods. Now, there are exceptions to this ownership rule, but they are few and far between. So it is really important to concentrate on ownership. If you're importing goods into the UK and you're not the owner, you're going to have difficulties recovering import VAT. But more about the two systems. So the default system sees a physical charge to import VAT at the time of import. So this incurs the business importing, paying VAT over to HM Revenue and Customs, and then recovering it on their VAT return at a later date, subject to their VAT profile. So if they're able to recover 100% of VAT, they recover it all. If they can only recover 50%, they recover some of it. It's possible under this system to defer the payment of import VAT. Usually around the 15th of the following month, HM Revenue and Customs require payment of deferred VAT. And to obtain deferment, there's an application process. It isn't automatic. You must apply and be approved. Under the deferment system, there is also a need to provide a financial guarantee in respect to VAT to HM Revenue and Customs. But also if you have been in the system for a while and are fully compliant, then you can also apply to operate simplified import VAT accounting, where the VAT guarantee can be reduced down to as much as zero. There's an application process for that. The usual method of recovering VAT that has been paid on the default system is via a form C79. Now, this is issued automatically by HM Revenue and Customs, and it covers all the imports into the UK in the previous month, and it is nowadays downloadable from the VAT Online Services regime. The new system that was introduced on Brexit is called, as I mentioned before, Postponed VAT Accounting, or PVA. This is really great. There's no charge to import VAT at the time of importation. There's no cash outlay. There's no application process. Sounds ideal, but what must happen to obtain postponed VAT accounting is that the carrier or customs agent whoever's making the import entry must be instructed in writing by you, the business, to claim postponed VAT accounting. It needs to be done on each import entry. And if it isn't done, then the default system applies. So you would be charged import VAT at the time of importation if the carrier or customs agent doesn't claim PVA on the import entry. The way import VAT is declared is by an output tax adjustment on a periodic VAT return, and then that output tax equivalent can be recovered as input tax, subject to the rules I mentioned earlier on, subject to your VAT profile. There is also the issue by Revenue and Customs of a postponed import VAT statement. This details the imports that have been entered under postponed VAT accounting and schedules the amount of VAT that should be declarable by the business as output tax, and obviously as input tax, subject to whatever restrictions to input tax recovery the business has. And again, these statements, postponed import VAT statements, are downloadable from the VAT Online Services regime.
So maybe if you could expand a little bit on why import VAT is charged in the first place, and then why it is recoverable as well, even if it's charged?
Well, VAT is a tax on supplies or transactions. So if you buy goods from a UK supplier, you are charged VAT. However, if you buy goods from an overseas jurisdiction, they are not subject to UK VAT. So the way the UK government and other governments, it's a pretty universal system for those countries that operate a VAT regime. The way that the VAT playing field is leveled up is by a charge to import VAT on goods being imported. Mm-hmm. So that is the reason why import VAT is charged. Input tax is VAT that a business has been charged that it can recover on its VAT return. So all businesses that are VAT registered who are buying goods from suppliers in the UK or importing goods from overseas and incurring VAT or imputing VAT under postponed VAT accounting are entitled, at least to some extent, to recover that VAT. And that is called input tax.
Right. Why are they entitled to recover that input tax?
If they make taxable supplies as a business, mm-hmm. So they are supplies that attract a VAT rate. For example, in the UK, we have 3 taxable VAT rates. There's a 0 rate, a 5% rate, which we call the reduced rate, and a 20% rate, which is the standard rate. So a business of making taxable supplies and charging VAT to their customers are entitled to recover the VAT that they've incurred, whether it be from UK suppliers or import VAT, to the extent that it relates to those taxable supplies. Right. Again, with the VAT world, there's little nuances and differences around the edge of that, but that is essentially the basic principle of recovering import VAT or input tax.
Right. So basically, if I understand correctly, and I'm not an expert in VAT, so essentially, because you bring goods into the UK and you attract sales tax after the fact of bringing those goods into the UK, that allows you to essentially recover the import tax because it will be charged later on in the, let's say, supply chain within the UK.
Yes, it becomes a cost component of a supply that you are making that is taxable to your customer.
Right.
Yeah.
So essentially, it is the customer who ends up paying for all of the VAT.
Yes, but with the VAT system, it is only usually the consumer that VAT ends up being a cost to, because all the way along the transaction chain, businesses that are VAT registered and making taxable supplies can recover the VAT that they incur.
Right.
Yeah. So the cost, the VAT cost, is ultimately borne by the consumer.
Right. Well, of course, there is a lot of nuance when it comes to VAT, and obviously we cannot tackle all of the different elements of how VAT is, let's say, calculated, how it's applicable, and etc., etc. But today we want to talk specifically about the postponed VAT accounting, right, which essentially allows you to avoid it altogether upon import, provided you tick a box on the import declaration and provided you discuss this prior to any import with your freight forwarder / customs agent. However, there are situations where this is not applicable, which you've already mentioned. Essentially, it means that if you do not own the goods as the business that you are importing, you cannot apply PVA. And so what we've been noticing, right, in our practice is this is mostly relevant for companies that repair goods that they do not own. So they either bring them into the UK or they send them outside of the UK for repairs, but they essentially take responsibility for importation, exportation processes, right? So they act as importer / exporter, so their name appears on the documents. Maybe this is best explained by a case you and I both worked on, which we had a company that was selling specific equipment, which they would then send over to Europe to their customers. After a couple of years, that equipment would need to be recalibrated, and so they would re-import those goods for recalibration to later on re-export them to those customers based in Europe. Prior to Brexit, this was a seamless process, whereas after Brexit, this has become a sort of a cross-borders transaction, which meant that that company that would recalibrate the goods, first of all, would not own those goods, but they would still act as importer of record in the UK. And so technically, they would assume that PVA would be applicable, and so VAT is not payable. However, later on, during a customs official audit by HMRC, it was discovered that all of that VAT chargeable for that equipment was actually payable. And so they ended up with a massive bill in the region of like 300,000, I think, just in unpaid VAT, right?
Yes.
So
I
then,
remember the case well.
yeah. So then we had to essentially agree a plan with HMRC, first of all, for repayment of that VAT, but also a mitigation strategy, which is more related to customs. So just to finalize the PVA and the ownership before we move on to actual solutions, if you could maybe sort of give an explanation as to why the ownership matters so much.
It matters because the courts have said it matters. What the courts have stated is that it must be the owner of the goods that recovers the import VAT. As I mentioned, there are some exceptions, but that is the basis of the recovery of import VAT in the UK. There are many reasons why businesses can't use PVA, but that's probably for another day. I have another client which you haven't worked on yet, Victoria, that's currently owed over £527,000 in import VAT that it can't recover.
Quite a lot, I would say.
It's a lot of money, and
it's a big hit for a business to deal with.
Yeah, and it was about 2.5 years late on to trying to get that problem sorted out as well. So there are a lot of businesses out there that are affected by this. And if you're a business that's only making a 15% margin on the supplies you make, and you've got a 20% VAT bill, VAT that you aren't able to recover for whatever reason, you're actually making a loss.
Yeah.
So VAT becomes commercially a very important component of business profitability. So in a lot of cases, this is a serious subject matter that needs to be taken seriously.
Yeah. And just maybe a side note as well from my experience working with clients is that there's a lot of firefighting in the area of customs and VAT because our clients, for the most part, are not always aware of these intricacies and these small elements. And so we would always advise to essentially try to review your supply chain and all of these different details with the consultant, because then a bill may come in and, of course, all of the information is available online. And, UK government is quite good at, I suppose, providing the digital resources for us to go through. But not all information is on those resources. Sometimes certain details are not mentioned, or a certain level of nuance and procedural sequence of event is not always well explained, right?
Yes.
So it would be always important to kind of review this prior to any action, because then you might get a bill of $500,000.
Well, the businesses that are getting those bills are usually ones that haven't taken advice and haven't looked at their supply chains from a customs and VAT point of view, and they should be looked at and as far in advance of the issue arising as possible. In fact, if the review is done correctly and recommendations implemented, there may never be an issue.
Yeah.
So, yeah.
Okay, so I mean, if we talk about solutions, I think we've sort of explored what PVA means, what import VAT is as well. So the solution would generally be to implement a custom special regime, which essentially allows the suspension of duties and VAT. In the country of import, such as UK, is inward processing relief, which basically allows for goods to be imported for repair or for specific modifications, manufacturing, under suspension that allows those goods to be re-exported when it's finalized. In order to essentially operate that regime, a business needs to apply for an authorization from the customs authorities, unless, of course, they only want to operate that process for about 10 times a year in the UK. Post-Brexit, this has been changed. In the EU, it still remains at 3 times. And so it's possible to essentially apply that process, that procedure through an import declaration, provided all of the special codes are used. These are known as customs procedure codes. And of course, all of this needs to be agreed upon with the freight forwarder, just to make sure that they are aware that the business wants to apply this process, that they have the capacity and the knowledge to essentially work with this process. Because when goods are brought in, there's a specific message that is sent to the customs authorities through the import declaration, whether it be through an existing authorization or not. But after the process is done, the goods need to be discharged from a procedure. And so many people with whom I've spoken, they assume that, okay, we have inward processing relief, so we can just apply it, but they essentially forget about the exiting strategy from the regime. And so it's important to mention that there are different steps to implementation, which implies acquiring the authorization, which implies changing some processes internally, which implies also training of staff. Staff need to be aware of the fact that this procedure is being applied within the business. There's also an element of record keeping. There's also an element of constant communication amongst the different stakeholders. And of course, the exit strategy, which is the discharge procedure, which kind of implicates all of the whole process, and the subsequent export declaration, which also requires specific codes to be mentioned, just to give the authorities the digital message of the fact that those goods have been transformed and are now being exported. Another procedure that I wanted to mention is also outward processing relief, which essentially allows UK goods that are being exported to a different territory for repair or what have you, and then they can be re-imported under outward processing relief, where only the charges related to a specific repair are payable, for example. So essentially, it allows the goods to be exported, where you give the customs authorities the message that you want to export those for repair to then be re-imported under lower customs duties and VAT, because you've already essentially communicated to HMRC that you want to export those goods for a specific process to later be re-imported. There is a possibility to apply for, let's say, an OPR or IPR retrospectively. HMRC allows it for a period of 1 year, provided the business can prove an economic need. Generally, what I've noticed in my practice is that retrospective authorizations are extremely tricky to obtain. It is tricky. Why? Because generally HMRC will ask a question as to why have you not applied this regime earlier? Why only now have you gotten the knowledge and have come to us to ask for a retrospective regime? So usually they would inquire whether there's an economic need for it. So essentially, you as a business, you would need to come up with a good justification as to why this regime was not applied before. And also the business needs to have their records in order, which can be also a tricky thing to do, because when a business is in a relationship with a freight forwarder / customs agent, all of the import declarations are generally kept by the freight forwarder. And so the business, seeing that imports and exports occur normally and there's no issue or there's no apparent issue, they tend to disregard the fact that all of those entries and all of those documents need to be safely kept for potential analysis later on, or for potential provision to the customs authorities for analysis in case they decide to conduct an official audit. There are also other customs special procedures, such as, for example, a customs warehouse, in which case you are allowed to bring the goods for storage exclusively. A customs warehouse allows for some processes to be applied to the goods. This can be just general maintenance, but for the most part, it's related to storage and a few other processes. As we've already mentioned, it always is necessary to review the circumstances very specific to the business. But for the most part, our objective at the moment is really to warn businesses that this is an existent issue that has potential to either destroy a business or make it more profitable, right? Because repairs sometimes can be kind of the basis for the business to maintain a connection to customers that they've had previously, to essentially maintain those contacts, which can be important.
And separately, right. Victoria, separately, the postponed VAT accounting system is used in other countries as well. The Republic of Ireland introduced a similar system at the time of Brexit, and a year later, France introduced a postponed VAT accounting system.
Right.
And what I have mentioned regarding the VAT system in the UK is transferable to a lot of EU member states, albeit they have their own rules and regulations about whether applications need to be made, etc.
Yes, when it comes to customs special procedures and suspension of duties and VAT, the legislation is fairly similar, but of course, different countries, they apply their own digital systems or their own channels of communication with the authorities through which you would need to essentially request those authorizations. And then there are different softwares which different freight forwarders work with that would also, require a technical knowledge with respect to how the different codes are input, what information is actually required, etc. But for the most part, generally, the information is quite uniform. And so it just requires you to, know your supplies, understand what movements of goods you are expecting throughout the year, for what time you would require the authorization to last, what values are applicable to the goods. And of course, internal procedures are important because, as I've already mentioned, staff need to be aware of how to manage the process. And customs authorities often will inquire whether there is a customs specialist that the business is either working with, or whether they have someone in-house that will manage that complexity. We always advise businesses to speak to a consultant, because circumstances are varied and there may be specific rules applicable directly to a business. If you wish to contact us, we will have our details below the video.
Thank you very much.
Thank you very much, and see you next time.
See you next time. Ciao.
Ciao.